Nice to see you again, and thanks for having me. It's appreciated. Look, we had a great operational quarter. We had our highest upstream operating efficiency in history. Our refineries in the first quarter ran at the best they've run in 24 years. We had 6 exploration discoveries in a row, which is really unusual, and we started up 3 major projects. Right now, we're focused on delivering that strategy you laid out. You talked about that we laid out to grow cash flow from $8 to $14 billion over the next 3 years, and we're off to a great start in 1Q.
You are under a lot of pressure, Murray, not least from the macro environment, but also, of course, from investors, namely the fact that you now have an investor who is activist on your shareholder roster, with Elliots owning circa 5% as well. How much pressure are they putting on you for a more aggressive strategy than the one you outlined in February?
Look, we don't really comment on interactions with investors. But of course, we've laid out a good strategy 9 weeks ago to grow the cash flow from $8 to $14 billion. It included a divestment target of $20 billion, and we're off to a great start. $1.5 billion already delivered it after the first quarter. And we talk about decreasing our costs by $4 to $5 billion. That's 25% on top of the 25% we did earlier in the decade. We've got aggressive plans, we're fast in action, and we're in delivery in 1Q.
In terms of the pressure that the macro is putting on you as well, there is no doubt about it, and the copy was all about this in advance of the broader earnings season for the oil majors as well, the energy majors, I should say as well, is that the low oil price, and we are currently trading on Brent, well, circa $65 a barrel as well. Does that put a lot of your plans stated in February in jeopardy?
Not really. We have a balance of products that we think about that generate revenue for us. It's oil, natural gas, and refined products as well. In the first quarter, the oil price averaged $74. Right now, I think the year we're forecasting to be around $67.50 using the forwards. Natural gas, we're largely hedged, and refining margins are coming back up. So overall, we're relatively balanced across the 3 products that generate revenue, and we're off to a great start, as I talked about. Out of an abundance of prudence, we've done 2 things. First, we've trimmed capital by $500 million in the quarter. That just seems a sensible thing to do, and we've accelerated divestments. We're off to a great start. We're now increasing our divestment range from $3 to $4 billion. And we think that's more than enough for now to take care of an external environment.
Murray, it's Karen jumping in. Good morning to you. Let me just extract a bit more detail around the share buyback, because the market was pointing to the drop in the oil price to your potential and what you can still do on the share buyback. We can see the $750 million maintained today. But where does it go from here? Because some think that will shrink even further from here in coming quarters. Is that the case?
When we laid out our financial frame, we said that we'd be having a dividend increase of 4% per year. That was what we were focused on. We're also focused on reducing our net debt over the next 3 years to around $14 to $18 billion, principally through the divestment program that we talked about that's off to such a good start. We'd invest $13 to $15 billion of capital. And then out of excess cash, we said excess cash would be shared with shareholders through buybacks, and that's what the $750 million is. We said within a range of 30 to 40%. As we look forward, we're not predicting what the buyback will be in 2Q or beyond, given macroeconomic uncertainty. But what shareholders can count on is that out of excess cash, they'll get 30 to 40% of both the dividend and buybacks to top that up. And that's our commitment to the market.
So still somewhat of a cloud then over where we go to on that buyback. Let me ask you then about the divestments, the $3 to $4 billion that you spelled out for this year. What have you achieved so far this year? And what about the questions that the activists are now raising the market as to whether you should hold on to the petrol network, which is really the consumer-facing part of the business that some drivers really see BP day in, day out in terms of that visibility of the brand?
Yeah, there's a lot of interest in the assets that we have on the market. We've already achieved $1.5 billion decapitalizing some pipelines. We've bumped the range to 3 to 4 based on the strong interest we're seeing across the transactions that we're doing. And of course, we've launched our process on Castrol as well, a great brand that's performing very, very well, 7th quarter in a row. As far as the retail network, et cetera, we're an integrated energy company. We have a big trading division. In order to trade effectively, you need to be able to sell the product into markets, and that's what the retail markets do for us, both storage terminals, retail stations, and refineries. So that's very, very important for an integrated energy company. And what we've committed to do is churn 10% of that portfolio. So we've started that with an announcement of divestment of Austria and the Netherlands, and we'll continue to high grade that over time.
Can I just turn to the Capex? The number you've spelled out today, the $14.5 billion, smack in the range of where you've been guiding for annually. But the market here is also wondering how much of this will go towards renewables, how much of it is sustainable, given that there's a bit of shift in the business recently. Just walk us through the thinking here and what is a priority now when it comes to Capex.
Yeah, so when we laid out our program to grow our cash flows from 8 to 14 billion, it included a capital range of 13 to 15 billion. We originally guided 15 this year. We've trimmed that to 14.5 based on capital efficiency and choices we're making. We are back to growing the upstream, so we're investing 10.5 billion into the upstream. We are fine-tuning and focusing our downstream business, so we're investing around 3 to 4 into that business. And then renewables, as you say, very, very capital light. We formed new partnerships with JERA and X to decapitalize our offshore wind business, so we get the electrons with very little capital. And our solar business will bring in a partner. We'll start that process in the second quarter here. We'll bring in a partner. And again, that means not much capital goes into it, if any at all, but we get the electrons for our trading business.
Murray, people are making a lot of comparisons between yourself and the US oil majors. In fact, I think you've been making the same comparisons, trying to redress the gap between the valuations for, say, an Exxon on 15 times forward as one measure and BP sub 10 as well. What do you think is the biggest barrier to closing that gap?
To be honest, is growing cash flow. We think that share price depends on at what pace you grow cash flow and how confident the market is in that. We have sector-leading growth going from 8 to 14 billion across the next 3 years. That's 20% compound annual growth. And having talked to 75% of our institutional investors, they're supportive of the direction of the strategy, and they just want to see us deliver. And I think if we deliver that cash flow growth, that starts to close the gap for sure. And we've had a great start in 1Q.
Murray, do you think you're a takeover target? I've got to ask. You're a £57 billion company, which seems huge by British standards, but Exxon is worth, I think, just shy of $500 billion as well. A lot of people have been talking about you in the crosshairs, given your huge US assets as well. Do you think if the operational improvements don't come quickly enough, that you will be a takeover target?
Look, I'm not going to speculate on that. What I will say is we're a strong independent company and we've got sector-leading growth. And if we can deliver the sector-leading growth, and the first quarter is a fantastic example of that, then I have no concerns. I think we're going to do great.
Have you asked for protection from the British government, some form of golden share or something, just to kind of keep the predators away?
No. We're a strong independent company, and we remain focused on growing cash flow and growing returns for shareholders.
Final one from me before Karen jumps in as well is just tell me a little bit about the environment stateside as well. We know that OPEC is putting production back on the table, which seems extraordinary at these levels, given the fact that they need such a much higher price as well. But the US administration, we all have heard it a lot from the administration, it's about drill, baby, drill. Is that helpful at the moment, Murray? Is it increasing more production stateside? A lot of people are worried, actually, that the increased production isn't needed at this stage of the cycle.
Well, look, I think a few things. As I reviewed the business last week, demand across all the businesses has not changed yet. There's lots of concerns about change in the future, but so far we haven't seen any dampening in demand in aviation, transport, etc. I think the second thing to think about is there are a lot of different variables out there right now on what's going to happen to price. It includes OPEC Plus, as you mentioned. It includes the U.S.-Iranian relationship. And then, of course, supply. And as Brent dropped below $70, we started to see some activity start to fade. I think if you look at the United States, the drilling rig count's down 10% year on year now. So it seems like as Brent drifts below $70, you'll start to see some supply pressure as well. As far as the United States goes, we're focused very much on growth, growing from 650,000 barrels a day to 1 million a day by the end of the decade, and pleased to help the administration in their energy dominance agenda.
Murray, we've danced around the topic of some of the demands from Elliots, the activist investor, but can I just tackle it head on? Because they seem to be very active behind the scenes, if reports are right here, and you've been in dialogue with them around some of the major demands around cost-cutting and asset divestment. What sort of engagement are you having with Elliots right now, and how close are you, do you think, to really appeasing some of the concerns that they've had?
Look, we don't comment on interactions with individual shareholders. What I will say is we put out a very aggressive program, and we're fast in action. The 8 to 14 billion of cash flow growth, we're off to a strong start. On costs, we reduced by 25% earlier in the decade. That's another 25% now, very aggressive, and we continue on track with that. Costs actually dropped by 500 million between the fourth quarter and the first quarter, so we're doing very well. And we had a blockbuster divestment program of 20 billion. We've already delivered 1.5 billion of that the first quarter in. So we are aggressive in action, and I'm confident in growing cash flow, which is what all of us want.
Lingering questions in the past 24 hours about energy security, thanks to the power outages in Spain and Portugal. We know geopolitical landscapes are moving very, very quickly right now. How are you perceiving the need to balance energy security with a further push towards renewables?
I think over the past 5 years, the world's changed an awful lot. Conflict in Europe, COVID, recession has really changed the conversation with governments around the world. For instance, I was in India the other week, and energy demand's growing at 14% per year. So most nations around the world are now focused on energy of any form. Of course, they'd like it lower carbon, but the priorities are security, affordability, and then emissions. So I think we're in an energy additive phase right now in the world, and people are just looking for firm supply that's local and that's affordable.
Murray, it was a bruising AGM with Helge having quite a large vote against his reappointment. I know he said he was stepping aside anyway. We know Amanda Blank is searching for replacement chairman as well. How close are we in that process of finding a chair? Because you pretty much need the ally, I guess, in the boardroom at the moment.
Well, as Amanda said at the AGM a couple of weeks ago, the process is launched. We're not going to give a step-by-step commentary on it, but the process is launched, and as Amanda said, she's in action fast and moving fast. So we'll update the market in due course, Steve.